Good afternoon from Baltimore. This is Alastair Williamson. Today's the 23rd of March, 2017. This is the auto industry, and we're taking a look specifically at Ford. And management this morning warns about a 50% drop in profits for quarter one. Let's back up a second. I thought we had the best economy ever, best jobs ever, the hype, the sentiment, everything is there. What is this narrative? What's this story coming out about Ford? Is it fake news? You know what? I think it's reality is what it is. If you look at credit creation of the auto industry falling off the cliff. If you look at the resale value of used cars falling off the cliff. Even the management of Ford a couple quarters ago saying plateauing auto industry. Plateauing auto industry. So this was foreseen. And understand that the zero lower bound and the rates being extremely low and the affordability of these cars, where's the consumer? Teddy Valet had a great piece, fourth quarter of 16. I think he was a little early to the game, but he is on point. It's the consumer. Look what the consumer has done to the mall industry. And the consumer is about to wreak havoc in the auto industry. If you want to be in the bubble, or if you want to understand the bubble, you have to be in the bubble. Our UAS operator has given me tons of footage from Baltimore. Understand, Baltimore has a major auto port. Actually, I think it's one of the biggest ports in the country for autos. Car carriers, 4, 5 of them come in every single day from Japan, Asia, other parts of Asia, Europe, South America, Mexico, everywhere. They come, and they come through one specific channel. It's right on the Francis Scott Key Bridge. Our UAS operator has given us tons of footage again of the piers. We don't fly over the piers. We fly on the perimeters and the outside, but we see the bubble. We see the supply chain. Doesn't necessarily mean the bubble's here. We just are in it and seeing it. So we want to look at Ford on a technical side of life and just take a look at what is happening. And what we notice from an 81 low, we put again, extending upwards and outwards. And we notice something very interesting. Peak auto in America, if we want to use Ford as an economic bellwether, and why the hell not, was in the late 90s, early 2000s. Since then, it's post 2002, 2001, it's whimpered along. And you can look throughout time is that the rule of migration through the angles, I mean, the market reacts pretty well. And in some cases, extremely well. So what we're looking at here, present date, let's zoom in. We're looking at a possible, we're going to call this the descending triangle. You can call it many things. We're just going to call it a descending triangle. This is a lot of overhead. This is almost an entire cycle of overhead. You know, cash for clunkers coming online. This is a lot of overhead, a lot of shares, a lot of narratives, a lot of stories that we're told of how everything is so great, of this illusion. Our question is, you know, if these stark warnings from management of Ford and looking at the data when it comes to used car sales and the valuations there, along with the credit creation, I mean, credit's just how you don't usually buy a car with cash. It's credit based. So we're looking at this rule of angle, and this is a 1/2. This is a 1/3. We believe if the 1/3 level right here, and we'll call it 1196, and we'll call it around the 100 MA, the 100 moving average around the monthly time frame. If that 100 MA continues to be violated and is confirmed, also breaches the 3/1, we see a 20% haircut in Ford based on, suggested on, the rule of angle migration of a 2/1 to 3/1. And actually it's a 2/1 to 3/1, which we saw in 14 to 16. This is actually going to be a 3/1 to 4/1. And let's get a measurement, just a measurement from today's fair market value or around that. It's about a 20 to 23% haircut that Ford can see if this trajectory continues. Now, what I mean by trajectory is that if this downside trend continues, what it would do is unlock this overhead all throughout here, and that will act as momentum, like a fire sale. It will act as momentum and increase the velocity to the downside, or you can say momentum. Will increase the momentum to the downside and play a fantastic game of rule of angles. What's the overview here? The overview here is the Ford's management called this multiple quarters ago. Auto has peaked. And we'll say that's somewhere right around this trend, a 13 to 14 handle Ford. In the grand scheme of things, what we see is that auto peaked in the late 90s and early 2000s. Since then, 2000 and on, the auto industry has just whimpered along. From the fiscal stimulus packages of cash for clunkers via the government to zero lower bound in interest rates, are you telling me this is the best the entire auto industry could do? Or most importantly, this is the best that Ford could do? So once again, guys, this is the auto industry. What you need to know is peak auto, late 90s, early 2000s. Cash for clunkers revived Ford, revived the industry, and now the industry is heading into turbulence and possibly turmoil, and I think it's going to get a lot worse when you look at the resale rates. If you look at credit creation declining, and you just hear it from the mouths of management of Ford, who have been warning about this. Once again, this is Ford, and you should be very careful on the roads ahead.